What can you expect in the Cincinnati housing market during 2023? I know you're dying to know, so let's jump right in. Hi, I'm Rhonda with the Rhonda Everett Group at Comey and Shepard Realtors, and on this channel, we teach you everything you need to know about buying, selling, and living in Cincinnati. So we've got some interesting things happening in the housing market. Interest rates have been all over the place this year. And they did seem to peak early in fourth quarter and had kind of been coming down ever since. Basically, when the inflation numbers came in for October and November, they were a little lower than what was expected. And so those rates did start to calm down a little bit. But right now, during the holidays, rates are back up. Now, I believe that it really has to do with supply and demand. The banks have fewer people like loan officers and processors and people to work on these loans. So they're maybe not encouraging a bunch of people to actually go out and get a loan. And why do I think this? Well, because you'll notice that when rates do come down, the rates for ARMs, so like the 5-1 ARM or the 2-1 buy down, basically those go up, which says to me they don't want to sell those products. They are trying to discourage you from even getting that product. And so that's kind of what I think is happening this Christmas, but we will see after the first of the year. So interest rates and higher prices have created kind of this decrease in demand during 2022. And though I believe it mostly hurt properties that are not perfect, they're in less desirable areas, and maybe they started out overpriced, it does reduce the number of multiple offers that we're getting. And that's not necessarily a bad thing for buyers. It's just not great for sellers. Next, inventory is still really low. And for two reasons. So number one, people who already have a really low interest rate, if they don't have to move, they can make their house work for a little while longer. They may not have really the desire or pressure to make a move. And honestly, I don't know that I would encourage them to do that if they can stay put. They might as well just save some more money, pay down their mortgage, pay off debt. And that just puts them in a better place when they do go to make a move. But the second reason is lower foreclosure rates. MBA Marina Walsh Industry Analysis says,
for the second quarter in a row, the mortgage delinquency rate fell to its lowest level since MBA's survey began in 1979, declining to 3.45%.
Foreclosure starts and loans and process foreclosure also dropped in the third quarter to levels further below their historical averages. So, not much out there to buy from the bank. So what does all of this mean? Well, many have predicted increases and just as many have predicted huge declines. And as much as I respect Ivy Zelman from the Zelman Group, they've been touting this 5+% drop for a while now. And yes, things have slowed, but last I checked, we were still up 4% year over year. And did you notice that Zillow isn't listed here? I'm sure that they have an opinion, but when you lose over $800 million trying to predict the market, I feel like people stop paying attention. All right, so what am I predicting for 2023? Well, I think in the Cincinnati market itself, I do believe that we will see some growth, and I believe it will be higher than 0.4%. There's always going to be that one house that's amazing, that everyone drools over, and it's just exceptional in every way. Those help bring the market up. And there's always going to be some that aren't as nice, and yet they still benefit from that one property that was amazing. There will always be some that sell low or go into foreclosure. And really the key there is to make sure that that's not what's happening in the entire neighborhood. So back in 2008, that was the problem. If everything in the neighborhood was in foreclosure, well, any appraisals are going to be based off of those numbers, not off the more retail numbers. So definitely, I think we could see that happen in a few areas, but mostly people have a lot of equity in their homes. So I think it's a really slim chance. Now, there's always going to be certain price points in certain areas that do not increase or increase as much. And I do think we will continue to see some longer days on market. But overall, I predict that low inventory is still going to win out. And I think it's going to give us a solid 3.5% average increase for our area. But what are you guys thinking? We'd love to get your take. And whether you're just curious or maybe you're ready to take the next step, click on the link in the description that will help you get a home valuation, or go to our website and just connect with us so we can help you reach your 2023 goals. All right, we will see you in the next video.